Good morning. This is Ken Long from Tortoise Capital with another trade of the day for February 26th, 2013. I want to start off with a review of yesterday's trade of the day. I've already done a video on this. This was a 20R trade in UVXY. It was a sudden, sharp move of volatility as the market had its first serious adverse move in about the last 40 days after a bull quiet march up. So going into the trade for the next day on the 26th, my sense was that there might be some follow through on volatility because of the first day of shock selling, right? So I'm prepared to trade some volatility the next day. I don't carry any of this position overnight just because the gaps in UVXY are so treacherous that there's no point. In my view, I can't sleep at night with that kind of volatility looming. So that was the 25th, and so the 26th, here's the market opens, volatility sells off, finds support around 1170, has a little regression line crossover here, doesn't quite get to the Bollinger Band mean, pulls back, makes a slightly lower low, but now you can see the steepness of the Bollinger Band mean beginning to flatten out and the volatility of the river compressing. So this is almost starting to look like a sideways quiet channel. And so I look at the second regression line crossover. Yeah, it happened just inside the edge of the river. So I want to see some strength at the Bollinger Band mean before I get in, rather than just waiting for it to enter the river right here. So by this time, it got back to the mean. Found some support in here, so now I've had I had a low and now a higher low. The 30-period regression line is flattened. The 10 is moving up. It found support at the Bollinger Band mean. So I'm willing to take this one in here at 1185 with a 20-cent initial stop, which is outside of the river and really at the current low of the day. So that's the first entry, regression line crossover. I'm calling this February 26th, 2013 in UVXY, the double VIX. So there's the entry, there's the initial stop. Shortly thereafter, it moves out with strength. The ribbon leaves the river, and that would be, you could actually play that as a sideways quiet channel. So if you weren't entering here, you would want to be into this not later than 12. You could even go 1195 on the first move out, because then you had sideways, the Bollinger Band mean was flat, the river was narrow, and both regression lines and the price were inside the channel. So that's sideways quiet channel. So you could make that entry here, but I'm already into it, so I feel pretty good. Now right around in here, the regression line crosses the Bollinger Band mean. That's good. Next thing, it's going to leave the river here. That's good. That's the beginning of trending behavior in here. So at 1210, with about 1.5 R in hand and momentum, coming off a double bottom with 3 positive votes already, I enter the second position at 1210. It moves up to 1230 pretty quickly, so I'm going to get the stop moved up to no lose pretty darn quick. What happens shortly there? It goes up to 1240. That's starting. I'm starting to think that's an exhaustion bar. When I see the next one is a red bar that doesn't make a new high, and now the 10 period is rolling over. And then I get that second red bar. I don't stick around any longer than that. It's made a new lower high, if you will, and I cashed that one at 12.25. Both positions, so it's a little over 2R on that first leg up. And now my interest is seeing where does price go with respect to the Bollinger Band mean. A perfectly normal behavior would be a regression line crossover somewhere in here, and then a move back to about 1190. And that's my reason to take this exit here, is because I've got this much information, and now it's 2 of those down to the Bollinger Band mean. So I feel like I got my 2-to-1 reward to risk trade-off by deciding to exit here, and I keep that second position in the money and get paid. I don't want to suffer all the way down on 2 positions to see if it will hold at the Bollinger Band mean, because then if it does hold at the Bollinger Band mean, then I'm going to be wondering and hoping and full of anxiety while it gets back up here and then has to break out at 1235. 1235. If I held on to this, it went to the mean and then resumed, I wouldn't feel any relief until price got to 1235. So rather than suffer all the way down and then suffer all the way up and draining my emotional resilience, I'm just happy to cash a couple R here and then just see what happens. If it finds support anywhere north of the Bollinger Band mean and goes, I know that my reentry is going to be not later than 1235, and I wouldn't mind exiting here and then reentering immediately after this at 1235. That wouldn't bother me at all because I paid my insurance and I stayed within myself. Well, so what actually happened on this one is it finds support at 1215 almost immediately after I cashed it, finds support for a couple bars, and then starts moving out smartly. And as soon as it clears the Bollinger Band previous high, the BB2 swing high at 1235, I go ahead and re-enter with a 0.2 I stop, which in this case happens to be below the Bollinger Band 2 ribbon on the previous sell-off. So I get this position in here at 1235, and I'm back in with 1. And this looks now like one leg up, and I'm thinking, well, maybe there's another leg up of similar dimensions, which would at least get it up back here to vicinity where it opened today and where it closed yesterday. So I got one position in. Then it takes off right away at 1260 with momentum and a new high, and it's gotten back to close the gap. I'm now thinking there might be some more follow-through, so I'm prepared, and I put in a second position at 1260. Again, that's at about maybe 1 1/4 R in hand, but with momentum on the second leg up. So I get that second position in. It takes off and runs up all the way to 13, and then for about 6 minutes it horses around inside here between about 13 and about 1290 in that area. And so on a surge to 1295, I decide to go ahead and exit both positions and cash 4.5 R in that leg. And then again, it's exactly the same consideration as before, only now the distance back to the Bollinger Band mean at 1220 would put both of those positions underwater, and so I don't want to suffer all the way down and then suffer all the way back up until it gets above 13. So as I'm exiting at 13, I know I'm going to re-enter this not later than 1305, wherever it finds support and continues to go. Now, if it comes down and finds support at the edge of the river or the Bollinger Band mean and starts to move up, I can go ahead and take that, take a re-entry using 13 as a retest price target, and if I'm going to use a 20-cent stop on this, then I know that I can enter easily anywhere above or from 1260 to 1220 with a 20-cent stop and have a 2-to-1 reward to risk, even if it just goes up to retest 13. So in the act of exiting to preserve profit, I'm already framing the trade for re-entry based on immediately resumption, or if it pulls back some measured distance and then continues. So we cash 4.5 R on that one, and then we see what happens in the rest of this move. There was a potential re-entry in here. I didn't take it. And the point I want to make on this one for the aftermath is after that regression line crossover happens here, right about 1295, then the expected move, or the move that is not surprising, or the move that we're not allowed to be surprised if it does, is a price moving back to the Bollinger Band mean. So it did have one little move here. You might have taken that re-entry at about 1290. At worst, you should have scratched that if you took that one, and then you realize, here was the highest high, the swing high, and now a lower high and failure at the edge of the river. It doesn't even really push up into the floodplain much. And now you're starting to think this really does feel like failure. You could even play that on the short side, I suppose. I didn't, but again, then we're really expecting price to move back to the Bollinger Band mean of the river. In this case, it doesn't even hesitate. It fails all the way to the far side of the river and into the floodplain. And so in retrospect, as I look at this, from the regression line crossovers down in here, we get this was a move of 2 legs up with 1 pause in here, which allowed us to get an orderly exit and an orderly re-entry. The same kind of logic gets us out here. And now we can continue stalking this for the rest of the day. And now we have some price action from between 11.5 and 13. That's a 10% move, and that sort of, in my view, sort of sets the dimensions for the daily trade. This move here brings it all the way back to the VWAP, and now this looks like fair value. And now the rest of the day will unfold in the way that it will. And so that's another look at the trade of the day. I wanted to make this one because it really connects to the previous day's trade in UVXY, where there was a 20R move that was a wild runaway move, and now what you can see on this one is it was half that size, and there was a significant pullback here and a pullback here, so not quite as much volatility. That's almost like throwing a big stone in the lake when it's very quiet. And the first wave is the big wave, and then you have a series of smaller oscillations. And still, 7 R's, nothing to sneeze at, or 6.5 R's, so we're happy to make that trade. And the idea was that we were willing to explore the potential of a breakout on the long side for volatility because of yesterday's context, which influences the traders in the short term. So that's Ken Long from Tortoise Capital with another trade of the day for February 26, 2013 with UVXY. Thanks for your attention, and keep your risk measured and your powder dry.